Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about APOGEE Enterprises Inc. quarterly report. APOGEE Enterprises Inc. offers a diverse range of businesses and services that cater to various industries. The company's main segments include architectural metals, aluminum window, curtain wall, storefront, and entrance systems, architectural glass, custom glass for window and wall systems, architectural services, technical services, project management, and field installation for architectural curtain wall systems, performance surfaces, coated materials for various applications such as wall decor, museums, graphic design, digital displays, and industrial flooring. The company's products and services are used in commercial buildings, institutional buildings, transportation facilities, and multi-family residential buildings. They market their products through direct sales force, independent sales representatives, distributors, glazing subcontractors, general contractors, retail chains, and an independent distribution network. APOGEE Enterprises Inc. Stock price drop. A challenging year ahead. The APOGEE Enterprises Inc. APOGEE stock price has plummeted by over 45% in the past year due to a perfect storm of factors affecting its non-residential construction sector and financial performance. The downturn in this sector, exacerbated by higher interest rates, has led to soft demand, delayed shipments, and squeezed margins for APOGEE. Weaker demand and revenue growth have also contributed significantly to the decline, with a 4.5% year-over-year revenue decrease in fiscal year 2025. Operating income and margins have taken a hit, with a 24% decrease in operating income and a reduction in operating margin from 12.6% to 7.5%. The company's negative free cash flow yield has also been a concern. While the acquisition of UW Interco, LLC contributed to some sales growth, it introduced acquisition-related expenses and diluted adjusted earnings per share. Lower profitability metrics, including net income, adjusted net profits, operating cash flow, and EBITDA have contracted. Unfavorable guidance for fiscal 2025, with a projected net sales decline of 5% year-over-year, has also weighed on the stock. Although recent reports show APOGEE beating EPS and revenue estimates in Q2 fiscal 2026, the overall stock performance over the past year reflects the earlier and ongoing challenges. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the acquisition of new businesses, which contributed to significant increases in net sales. For instance, the Performance Surfaces segment saw a 145.1% increase in net sales and 154.2% increase in adjusted EBITDA due to an acquisition. Additionally, Architectural Services experienced increased volume, leading to a 2.5% and 5.1% increase in net sales for Q2 and YTD respectively. On the other hand, revenue decline is primarily attributed to unfavorable product mix and lower demand in certain segments. The Architectural Metals segment saw a -0.6% decline in net sales and -6.3% decline in adjusted EBITDA due to less favorable mix. Furthermore, the Performance Surfaces segment experienced a significant decline of -$21,610,000, -35% in net sales. Overall, revenue growth is largely driven by strategic acquisitions and increased volume in certain segments, while revenue decline is primarily attributed to unfavorable product mix and lower demand. Net income and profit margins decline due to various factors. The company's net income and profit margins have experienced a significant decline in recent periods. In Q2 2025, net income decreased by 22% compared to the same period last year, while Q2 2025 saw an even more substantial drop of 66%. The gross profit margin also declined, from 28.5% in Q2 2024 to 23% in Q2 2025, and from 29.1% in Q2 2024 to 22.3% in Q2 2025. The reasons behind this decline are multifaceted. Lower prices and volumes, combined with an unfavorable product mix, have contributed to the decrease. Additionally, higher costs associated with materials, tariffs, and health insurance have also taken a toll on profitability. Furthermore, increased restructuring charges and amortization expenses related to the UW Solutions transaction have further exacerbated the decline in net income and profit margins. The company is indeed generating positive operating cash flow, as evident from the financial summary and specific data points on page 5 and 38. The net cash provided by operating activities for both 2025 and 2024 periods are significantly high, indicating a strong ability to generate cash from its core operations. This trend suggests that the company is financially stable and capable of meeting its obligations. The company's debt level and interest expenses have undergone significant changes. The debt level has increased due to the new credit agreement providing for an unsecured senior credit facility of up to $700 million. This increase in debt has led to a substantial rise in interest expenses, with a 258% increase in interest expense, net for the 3 months ended August 30, 2025 compared to August 31, 2024. The 6-month comparison also shows a significant increase of 399%. These changes indicate that the company is now bearing higher costs due to its increased debt level. The company's financial performance varied across different segments and regions. The architectural services segment saw a boost in net sales, adjusted EBITDA, and net earnings. Performance surfaces also experienced significant growth in net sales and adjusted EBITDA. APOGEE Inc. reported an increase in its adjusted EBITDA margin. On the other hand, architectural metals and glass segments struggled with declining net sales and adjusted EBITDA. The corporate and other segments suffered a substantial decline in net earnings. Management's outlook on company strategy. The company is optimistic about its future prospects, with several key initiatives underway. The most significant development is Project Fortify, a comprehensive plan to streamline operations and drive cost efficiencies. By implementing Phase 2 of this project, the company expects to achieve annualized pre-tax cost savings of $13-15 million. In addition to operational improvements, management aims to become the economic leader in target markets by offering differentiated products and services that deliver value to customers. This strategic focus is expected to drive growth and profitability. The company also continues to review its portfolio of businesses, considering opportunities for expansion through acquisitions or geographic expansion. With a strong financial position, management has the ability to finance potential deals, positioning the company for long-term success. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In fiscal 2026, the company paid out $11 million in dividends, building on the previous year's payout of $10.8 million. Additionally, the company repurchased a total of 12,063,207 shares at a cost of $438.5 million, demonstrating its commitment to maximizing shareholder value through strategic share buybacks. Concerns about inventory buildup and supply chain disruption. The financial summary highlights concerns regarding inventory buildup in the company's supply chain. Between March 1 and August 30, 2025, total inventories increased from $92,305,000 to $102,463,000. This significant increase suggests that the company may be holding onto excess stock, potentially leading to storage costs and reduced cash flow. However, a closer look at the data reveals a contradictory trend on page 25, where inventories decreased to $17,903. This discrepancy raises questions about the accuracy of inventory management and potential supply chain disruptions. The conflicting information warrants further investigation into the company's inventory management practices and its impact on the overall supply chain efficiency. That concludes the financial summary for APOGEE Enterprises Inc. Feel free to comment below, and I will be happy to answer them when possible.